Hello everyone, welcome to Accounting 312. In this video, I will talk about the multiple choice of Chapter 9, Inventory Posting. So I'm going to post the notes to the Blackboard, but I go through all the steps briefly with you also. The first one talking about which of the following statement is true. They said, under absorption costing, variable manufacturing costs are inventoriable costs. This is right? Because absorption costing absorbs all the variable manufacturing and the fixed manufacturing. But under variable costing, they are treated as expense over the period. It said under variable costing, variable costs, manufacturing cost is treated as the expense. This part is wrong. Because under variable costing, variable manufacturing cost is still your inventoriable cost. Only fixed manufacturing cost is the period cost. So choice A is wrong. Choice B, under variable costing, fixed manufacturing costs are inventory. This is wrong. We talk about that. So they are the period cost, right? Under variable costing. So your answer should be D. Next one, talking about using variable costing method, which one is assigned to inventory under variable costing. So we said only your variable manufacturing cost, right? Only variable manufacturing cost will be included in your inventory. So you have to know what is the variable manufacturing cost. We said so it has to be manufacturing cost, which means the cost has to be occurred in your manufacturing department, and it has to be variable, which is kind of a direct material, direct material, direct labor, and then variable manufacturing overhead. So those are the main things. So we said selling and administrative, although it's variable, they are not your manufacturing cost. So it can never ever be our inventoriable cost. Variable factory overhead cost, this is your manufacturing, right? Because it's your factory overhead and it is a variable. So our answer is D. The third one, talking about you have the fixed manufacturing overhead and then you have a variable selling is this. Under variable costing, how should these costs be classified? So we said variable costing, the product cost is only your variable manufacturing costs. But this is your fixed, this is the fixed, so this should be period, right? And then selling price is always our period cost. So your period cost will be 100,000 plus that 80,000 gives you 180,000. And neither of these two, they are the product cost. So our product cost is 0. So your answer is D again. And then we go to the next one, talking about the main difference between variable costing and absorption costing. We said that this is how we treat our fixed manufacturing cost, right? This is how we treat our fixed manufacturing cost. And then question 5, talking about asking you about the period cost for absorption costing and then for variable costing. We said period cost, the absorption costing is only your non-manufacturing part. So absorption costing will be 150,000 plus 195,000. But variable costing has 150,000 plus 195,000, no doubt, but it also includes your fixed manufacturing cost as your product, as your period cost. So this is the troublemaker, we said. The first 3, direct labor, direct material, variable, factoring overhead, they are always your product cost. This is always your product cost. Sales and general administrative, no matter variable or fixed, they are always your period cost. So the only troublemaker is how do we deal with fixed manufacturing overhead? Under variable costing, it's your period cost. under absorption costing, it's your product cost. So you have to make sure you know the difference. Okay, so I want to go through, review these 5 questions briefly, so you can find out those 5 questions talking about the first learning objective of our chapter 9. What I want to say is you have to know like the conceptual question, like question 1 and question 4, they are just talking about the definition. And then you also need to know what's the meaning of variable manufacturing cost or the non-manufacturing cost, right? I said, if I say, hey, CEO salary, you should be able to know that is your general administrative kind of, that's always your period cost. If I say the utility you used in your manufacturing department, then that will be your variable manufacturing overhead because it's in your manufacturing department. So first is your manufacturing cost, and then it's utility. The more you use, you know, if you turn on the light, you will have a more utility cost. If you turn it off, you don't need to pay the utility. So that is our variable manufacturing cost. So if I say, hey, how about the rent for your manufacturing department, then that will be our fixed manufacturing cost. So go back to chapter 1, 2, especially chapter 2, kind of, I recommended a video when we did our review section. Make sure you want to watch the video. And then also be careful when you do the multiple choice, like question 5, asking about your period cost. I said, hey, ask yourself, how about the product cost? So you use one question, but then ask yourself different perspectives, from different perspectives. Okay, question 6 and question 7, 8, they are talking about how do you get your operating income using our operation variable costing and using our period, using our variable costing and using our absorption costing. So let's say the first one, I go through the question with you using one example. I'm not going to do one more time. So you can read my handout, or you can, you know, use your PowerPoint or something. Okay, so let's say the first one, I'm talking about what is your operating income using absorption costing, and then asking using your variable costing. Either one is fine, so we do absorption costing, and then, no. So asking about our variable costing and then absorption costing. So when you do your exam, be really careful which one it asks. Don't mix them up, you know, don't put the wrong number. And then for variable costing, for absorption costing, okay, for absorption costing. So we said for absorption, question didn't ask you what is the product cost for each unit, but I always suggest you to do 2 steps. Always do that step, extra step kind of. So we said for our product cost, then under variable costing and under absorption costing. Variable costing is always your variable manufacturing. Absorption is variable manufacturing plus your fixed manufacturing for each, right? So this is asking about your each product. The question said the variable manufacturing cost is $19 each. So that is $19. That's easy. And then it said your fixed manufacturing cost is $750,000. So this is your total fixed manufacturing cost. You really use the $750,000 and you manufacture 250,000 units. So our allocated fixed manufacturing cost will be you totally spend $750,000 as the fixed manufacturing cost, and you use the money and you produce 250,000 units. So each one you allocated $3 as the allocated fixed manufacturing cost, right? So for our product cost for each one, sitting in our balance sheet as our inventory, each unit is $12 under absorption costing. Under variable costing, each unit is, sorry, it's 22, right? Sorry, what? It's my mistake. Okay, 22, and under variable costing is 19. So each one in your inventory, on your balance sheet, your inventory is $3 more for one product under absorption costing than under your variable costing. Now let's do our income statement. Under absorption costing, we always write down the formula kind of. It's our revenue minus cost of goods sold gives us gross margin minus non-manufacturing gives us operating income. So our revenue is, we sold 170,000 and then each one is 41. I'm not going to do the number, you can use your calculator. And then we said subtract your cost of goods sold. We sold 170,000 units, and one unit, our cost is $22. Remember, it's here. That's why we calculate that $22 there. So our gross margin is 3.23 million. We subtract all the non-manufacturing. We have variable non-manufacturing. We have fixed non-manufacturing, right? Variable non-manufacturing is $13 each, but we sold 170,000 units, and then each one is 13. And then non-manufacturing total fixed cost is 420,000. So you subtract both, you should be able to get 600,000 as our operating income under absorption costing method. Okay, now look at our variable costing method. It's your revenue minus variable cost gives you contribution margin minus your fixed cost gives me operating income. And then our revenue is 170,000 times 41 each. We subtract all the variable cost, no matter it's variable manufacturing or variable non-manufacturing, right? We said variable manufacturing is 19, variable non-manufacturing is 13, and then we times our 170,000 units we sold. We got our contribution margin this much. We subtract the fixed cost. It can be fixed manufacturing or fixed non-manufacturing, right? We don't care. We just separate it based on variable and fixed. Fixed manufacturing, we said it's 750,000. Fixed non-manufacturing is 420,000. So that gives us operating income, which is 360,000. What you need to do, you double check, right? So we got the answer first. Under absorption is 600,000. Under variable is under absorption is 360. Under variable is 600,000. Excuse me, 600,000. So what we need to know, the first thing is we produced 250,000 units. But we only sold 170,000 units. When our production is more than our sales, we need to know our operating income under absorption costing is higher than operating income under variable costing method. Why? We said because part of the cost of goods sold in absorption costing is deferred because of the products, because you still have 80,000 units that are not sold. So the allocated fixed manufacturing costs, they haven't been expensed. They were still deferred as your inventory. It hasn't go to your income statement. It still stays in your balance sheet as the deferred cost. So now we double check, we found out, hey, absorption costing operating income is really higher than our variable costing method, right? And then second, we want to make sure, hey, the difference. We said the difference of these two methods, especially when your the difference, no matter actually no matter you produced more or you sold more, the difference is always the difference of your production minus your sales, or the sales minus your production if you sold more than your production. Time our each allocated fixed manufacturing cost for each unit. So that is our ending inventory, right? That is our ending inventory. In our case, we produced 250,000. We sold 170,000. So we still have 80,000 left as our ending inventory. We said for each one, we allocated, how much? We allocated $3 to each unit as our allocated fixed manufacturing cost, right? So we have 240,000 that should have been expensed if we sold all the products. But because we sold only part of our products, these 240,000, they were not sold, so they couldn't be expensed. They had to be deferred as your ending inventory instead of going to your income statement. That is why under absorption costing method, we subtracted 240,000 less. We subtracted 240,000 less as the cost of goods sold. Our total expense is 240,000 lower, so our operating income will be 240,000 more under absorption costing than under variable costing. It has to be 240,000 more under absorption costing than under variable costing. Okay. So next question, I'm not going to do it one more time. I'll just point out some important parts. So you said you still manufacture 200,000 units, but you sold 120,000 units. So you have to know operating income under absorption costing will be more than operating income under variable costing. So that's the first thing you need to know. And then we have to know the difference will be our ending inventory. We produced 200,000, we only sold 120,000. So we have 80,000 as our ending inventory. And each one, what is our allocated fixed manufacturing cost? We said you produced 200,000 and then you spend the fixed manufacturing cost as 600,000. So your allocated fixed manufacturing cost will be 600,000 divided by 200,000. So each one you allocated $3. So our difference will be 80,000 units times our $3 each as the allocated fixed manufacturing cost. So your difference has to be 240,000, which means your operating income under absorption costing has to be $240,000 more than under variable costing method. So I'm going to post my solution to the Blackboard, but you can find out under variable costing method, your operating income is 200,000. Under absorption method, your operating income is 440,000. So your absorption is $240,000 more than under variable costing method, which is consistent with our prediction, right? Which is consistent with our prediction. So your answer for this one is 200,000, and then this one you just need to add 240,000 to get your absorption method operating income. Okay, so question 6, 7, 8, those are the questions that are practicing the calculation of our operating income. But as I said, you have to know two things. One is if your production is more than your sales, operating income under absorption costing will be higher. because you didn't subtract the total fixed manufacturing cost. Part of your fixed manufacturing cost is allocated and deferred as the ending inventory. So your difference then will be your ending inventory times your each one allocated fixed manufacturing cost. Okay, question 9, we said the difference will be under those two methods. We said it's your ending inventory times your fixed allocated fixed manufacturing cost, right? So it's the change of your inventory. You know, like you produced the 10, you sold 8, so the change is 2 ending inventory times your allocated fixed manufacturing cost. Next one, question 10, talking about said what is your inventory? What will be your inventory if you use variable costing instead of using absorption costing? So we said for the inventory, most likely under variable costing method, your number will be lower, because for inventory, variable costing only has your variable manufacturing cost, and absorption costing is variable manufacturing plus your allocated fixed manufacturing, right? So most likely you have some fixed manufacturing cost. So your inventory under absorption costing will be more than under variable. So variable will be lower. So you have to first know it has to be kind of decreased. It has to be decreased comparing with using the absorption costing. What's the magnitude? What's the number of the difference? We said that the difference is just the difference of the fixed manufacturing cost, right? You produced 700 units. You sold, how many you sold? Okay, you sold 600 because your ending inventory is only 100 units, right? Your ending inventory is 100 units. So we only have 100 units sitting in our warehouse. And then we want to know for each one, what is the allocated fixed manufacturing cost. We said fixed manufacturing cost is kind of already allocated for us. For one product, it's allocated $2. Therefore, our total difference for the 100 ending inventory should be $200. And it's $200 decrease if we use variable costing compared with the absorption costing. So if my question said, hey, how about absorption costing is used? Then it will be $200 increase, right? So one more time, you have to really read the question carefully. You cannot just say, hey, I memorize the number. That will not work. That will not work. Okay, next one, talking about CPA question. It said, what does it say? How much lower will your net income if you use our variable costing instead of the absorption costing? So we said the difference, we already talked about the difference of those two methods is always your number of ending inventory times your allocated fixed manufacturing cost for each product, right? You produced 100,000 units, you sold 80,000, so your ending inventory will be 20,000 units. How about our allocated fixed manufacturing cost? Your total one is 180,000, and then you used that one and produced 100,000 units. So your allocated fixed manufacturing cost will be $1.8 for each one. Therefore, our total difference between those two methods will be $36,000. So your operating income using absorption costing will be $36,000 more than using variable costing method. So this question asking the other way, so absorption costing will be $36,000 lower. So you can say the CPA question, they can ask you about your inventory in your balance sheet, or they can ask you about your income in your income statement. So make sure you know both statements, right? You know both of the statements. Okay, next one, I want to change the question. Actually, I thought about this. I want to change the question. So I want to change what is the amount of your total cost. What's the amount of your total cost? Relevant to the total cost. Okay, total cost. Okay, so the first thing is that you have year one, you have year two. Year one, your production is more than year two, and year two, your production is smaller than your sale. So then your effect definitely will be opposite, right? It cannot be the same because the first one produced more, then second year you sold more. So it has to be opposite. And the question said, what is your total sales under variable costing compared with the GAAP income statement, which is your absorption cost? We said GAAP income statement is always your absorption costing. But the question asks you about your total sales, instead of asking you incomes, your operating income. Two ways to think about that, So first, you can just, do the indirect way. The first year your production is more than sales, you can find out operating income under absorption costing will be more than operating income under variable costing, right? But this question doesn't ask you about operating income. It asks you about your total costs. So your total costs then will be opposite, right? Because your revenue is the same, but operating income under absorption costing is higher, which means you subtracted a smaller number of your costs, total costs. So your total cost under absorption costing will be lower than under variable costing. So your variable costing, total cost will be more in year one. Then year two will be just the opposite, right? So your answer will be B. Or you can just think about directly. We said when your production is more than your sales, we said variable costing, you expense all the costs, right? You subtract all the costs. You subtract first all the variable, you subtract all the fixed costs. But under absorption costing, part of your fixed manufacturing cost, we said, is deferred as your inventory. So you didn't subtract all of the fixed manufacturing cost. You only subtracted the cost that is sold. The part that is not sold is deferred. So you only subtract the part of your total costs. Variable costing subtracted all the cost. Absorption costing subtracted part. The other part is deferred in your balance sheet. So just think about that. Then your total costs will be more using variable costing than using absorption costing. So no matter which way you think indirect way or you think a direct way, when production is more than your sales, under absorption costing, you didn't subtract all the fixed manufacturing costs. That's the reason you have a higher operating income. So variable costing subtracted all of the costs, then you will have a higher number of your total costs. Okay, next one, talking about regarding the difference between absorption costing and then under the variable costing. So we said it's kind of straightforward. I'm not going to really read it. You should be able to know this one. And the last multiple choice talking about the absorption costing, we said absorption costing is the only one that can be used for external reporting. no matter it's for your financial purpose or for your tax purpose. But for your internal, you can use either absorption or variable costing. It depends on the manager. And then we also said absorption costing method can be used to manage your earnings, right? Because you want to have a higher number of your operating income. As the manager, one of the easy way you do it is you produce more, so you can defer part of your fixed manufacturing cost because you only sold a part of your production. So if you know those two parts, then you can say the answer is direct, will be A. Okay, I think that's all for our chapter 9, the multiple choice. Let me know if you have any question. Thank you.